Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of ADMAIL. I'm Adam Bergman, tax attorney and founder of IRA Financial. On today's episode, I'm going to keep it short. We're talking mid-August here. I know you guys are probably enjoying the end of your summer, so I wanted to give you three really good questions, but questions that I can answer pretty quickly, but nonetheless super important questions, okay? The first question is from Trent H. of Ames, Iowa, I should say. Ames, Iowa. Yeah, the summer is also getting to me. It's kind of melting my head. So first question, is my IRA FDIC insured? Okay, so what is FDIC insurance? It insures cash up to $250,000 that is held at a bank. IRA Financial is not a bank, but we use Capital One as our bank. We are a regulated trust company, regulated by the South Dakota Division of Banking. The charter allows us to administer and custody IRAs, 401ks, any type of retirement account, but we're not a bank. So we use Capital One. We partner with Capital One so that if you have cash with IRA Financial, your funds are FDI insured through Capital One up to $250,000. But once you invest your funds, obviously, if you send the $200,000 to buy a home, obviously the FDIC insurance doesn't apply anymore. If you have more than $250,000 and you're worried about FDIC insurance, we can bifurcate up those funds, or you can send in $200,000. Let's say, August 1st. And then once that gets sent to your investment or LLC, you can send another $200,000. There's different ways, but obviously the chances of, a major bank like Capital One getting into any financial difficulty, is pretty much zero. Banks are far more well capitalized today than they were in 08. But still, the FDIC insurance there, it's $250,000. It doesn't cover investments, but it covers cash in the account. So thanks, Trent, for that question. Second question is from Ying J of Spokane, Washington. And Ying wants to know, is a 401k considered a disregarded entity? So actually, a 401k is considered a trust. Okay, that's why you're the trustee of the trust. A disregarded entity is essentially an LLC. So a 401k is not an LLC. It's not filed with any state. When you establish an LLC, you don't file it with a state. You essentially have to adopt plan documents. Now, our documents have been pre-approved by the IRS. You'll get an opinion later that confirms that you are adopting, or your business is adopting, IRS-approved documents. Now, only a business can adopt a 401k. It could be an individual, sole proprietor, LLC, corporation, S-corp, partnership, but it needs to be a U.S. business. And if you're setting up or adopting a solo K, you cannot have any full-time employees. That means someone who works more than 1,000 hours, other than the owners or their spouses. So you can technically have an entity with 10 owners, say 10 lawyers, and let's say they do all their own work, they do all their own secretarial, paralegal work, and there's no non-owners. Maybe a spouse here and there works, that's okay, because spouses are not deemed employees. But if anyone else, non-owners, non-spouses of owners, work more than 1,000 hours in a year, then the 401k cannot be a solo, and it's subject to ERISA. It's a regular 401k. But a 401k is a trust. Okay, you're the trustee. There's a plan administrator that's responsible for all administration, but a 401k is not technically a disregarded entity. It's not taxed, kind of like an LLC, but it's not a disregarded entity. Third and final question. I told you it's going to be a short and sweet ADMAIL, and it's from Cindy D of West Orange, New Jersey. I got a lot of good clients. I actually know Cindy. If I set up a solo 401k with IRA Financial, who would serve as the 401k plan custodian? So great question. And, Cindy actually became a client. So that's how I know her name, because I actually spoke to her. But this question, I guess, was sent in sometime before. And essentially, the way a 401k works, unlike an IRA, in the case of an IRA, the trust company, for example, IRA Financial Trust is the trustee of the IRA. Okay. So in order to set up an IRA, it needs to be set up in three places, either a bank, financial institution, or a state chartered trust company like IRA Financial. That's found under 408. Why the trustee, the custodian of the bank or the financial institution has the IRS reporting requirements, the requirements to file the 5498s, the 1099s, to file the SARS. All that responsibility falls on the shoulders of a IRA trustee, i.e. IRA Financial Trust. In the case of a 401k, all the reporting requirements fall on the shoulders of the trustee or plan administrator, not on the bank, financial institution, or the trust company that custodies the 401k assets. So technically, the 401k plan custodian could be any bank. It could be Wells Fargo, Capital One, Chase, IRA Financial Trust. The only difference with an IRA is, again, the 401k custodian, the bank does not have any reporting requirements. It could, just like IRA Financial Trust could take on the reporting requirements if the client so desires. But in most cases, the trustee or the plan administrator will hire a third party, like a third party administrator, like IRA Financial, like Pension Investors, which is companies that we work with, that will do all the TPA work, the third party administration. Because again, the 401k, the bank, the custodian does not have the reporting responsibilities, whereas in the case of the IRA, the bank, the trustee has the reporting requirements with respect to the IRA. And that's why in the case of the IRA, the custodian has a much more important function, much more important job. Whereas the 401k world, any bank or financial institution could be the custodian. You need somewhere to park the cash. But the trustee or the plan administrator, you, for example, if you own the business, would have the reporting requirements with respect to the 401k. So that's a really great question, Cindy. I'm happy hopefully you got this answered because you turned it into a client. So I'm assuming you got the right answers and you're happy. But this is a really good question. I wish I got to it earlier, but here it is. So there you go. It's a quick lightning round ADMAIL. Let me know if you appreciate it. Sometimes I kind of get into it a little bit just because it's what I love to do. But I was told keep it short. It's the summer. People just want quick answers, maybe on the beach, doing a quick jog, or just kind of cleaning up around the house and just want to get some quick tidbits of knowledge. So hopefully that's what I did. Appreciate you guys listening. If you're watching on YouTube, thank you. Don't forget to subscribe. And don't forget, this podcast drops every Thursday. So if you've enjoyed it, come check it out again next Thursday. Enjoy the rest of your summer. Take care, be safe, and I'll talk to everyone again next week. Take care.